Hi, Jonathan York from Investment Research Group, looking at the investment markets ahead. Looks like being a quietish start for equity markets this week, with both the US and the UK having holidays on Monday, so it will be a little bit of a slow start to the market for equity markets. What these quieter markets have seen is that the New Zealand dollar has pushed up to a new post-float high now of 82.16 US cents. That really is quite remarkable, and it's really on the back of the story that started to break towards the end of last week, that China was looking to divest some of its investment funds again and looking at New Zealand and Australia. So that's really pushed up the New Zealand dollar. Also as well, there have been further inflows, so we're led to believe, from the insurance claims out of Canterbury, and that's pushing the New Zealand dollar higher. Now, while there's obviously good news for the New Zealanders at the gas pump, it does obviously have a negative impact for orders out there who are exporting into US countries. Obviously New Zealand goods are getting more expensive. That's certainly having a little bit of an impact on the share price out there. But obviously with the strong New Zealand dollar, it is a very good time to review your offshore share portfolio. There may well be some pretty attractive additions out there given where the currency is. So call us on 0800 867 323 to review that further. In Europe, we've still got Greece bubbling away, but the feeling is that the European Central Bank will come up with a solution that is acceptable to all parties. So that does appear to have been a little bit put on the back burner, but it is still bubbling away out there. Moody's have also downgraded the New Zealand banks. This comes on the back of the downgrade to the Australian parent companies last week. And while it's obviously disappointing in the bigger scope of things, compared with most of the international banks around the world, New Zealand banks are still in a pretty strong position, and there's no cause for any undue concern at present. Now, obviously we've seen good news out of Fonterra with the payments and the forecast for next year. The big question mark is now for the New Zealand economy and the recovery going forward, which is sort of portrayed in the budget, is that the farmers out there have now got to go out and spend this increased payout. There are some signs that is starting to take place, but it's still very early days, and we really have to wait and see if that's going to come to fruition before the New Zealand economy starts to get any head of steam up. In the US, as mentioned, it's a quiet start to the week with the Memorial Day holiday, and focus now is starting to shift towards second quarter earnings to see how the US economy is performing. Certainly the jobs data has been encouraging, but just recently some of the economic data has been a little bit disappointing. So we just waiting for confirmation that the US economy is still on the recovery path, and that'll start to come through in the second quarter earnings. Disclosure statement available on request, or go to www.irgbop.co.nz for lots of interesting articles, and we look forward to speaking to you soon. Thank you.